Opportunities mentioned on this show are offered by various companies, entities, and organizations that may not be directly owned, managed, or controlled by the real estate life. All credit decisions, including loan approval rate and APR, will vary based on your specific loan request and credit profile. The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation from the companies, entities, and/or organizations involved. A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Good morning and welcome to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. We're crushing interest. We're building freedom. We are going to do that today. I'm here to help you navigate today's mortgage markets, protect your hard-earned money, and give you the tools to succeed in real estate. Whether you're buying your first home, refinancing or existing property, or investing in future, this is the program. This is where you need to be. It was designed for you. Write down the number. You're going to need it. 888-543-3980. That's 888-543-3980. You could visit our radio website at yourrealestatelife.com. You can get started at unitedforloans.com. That's unitedforloans.com. Because we are for loans. We're just not for the interest that you're paying. We want to make sure that interest stays on your side by eliminating it sooner. We'll talk about that on today's program. You can watch us on YouTube, as many of you are, at Your Real Estate Life. But on today's show, we're going to talk about interest rates. We're going to talk about some of the volatility that we're seeing. We're seeing volatility right now, but we're seeing the bonds kind of bouncing as inflation data comes out. But we have the government shutdown. We have, and some information not coming out, the jobs numbers on delay, and we're not sure when we're going to see that. We're looking at global events and various other items. And then locally, we're looking at inventory here in Southern California getting a little tighter. It's a little tighter. So we're watching home prices not really rising as fast as they did, but maybe they're up 1-2% in some areas, but maybe in other areas they're flat. We're watching people put their home on the market expecting appreciation, but then they're maybe dialing it back a little bit. So we're having some prices come down to the listing price, but that's up to you and your professional, your realtor, to decide what it is and where your pricing should be. Now, in today's housing market, buyers are facing real competition, and that is that inventory. I mean, sellers have choices. I mean, we're looking at interest rates and qualifications that are a little bit tighter. We have to look at homeowners insurance and making sure you're not necessarily taking that lowest deductible. Maybe you're using something more of catastrophic. You're doing a higher deductible, maybe even a 5% deductible. But it's very important to get pre-approved. Not just a pre-qualification, but a pre-approval. By a pre-approval, it's getting that insurance quote for the zip code you're looking, with the price range that you're ultimately going to be getting. Understanding your down payment, whether you're doing a 0% down with VA or other programs that have a first and a second capability, a 1% down deal, various grant programs, whether you're putting 5%, 10%, 20% down. Now, you don't need 20% down to do a loan. So you want to make sure you are doing your pre-approval. We didn't even go into credit. Now, your credit score, well, my credit score is 823. Well, that's your consumer credit score you're seeing on your credit cards, whether it's your Visa, your Discover, whatever it is. You're seeing a consumer score. Usually that might be about 20 points higher than your mortgage score. So we want to understand where you are, whether you're at 780, 760, 740, and going further lower. And based on that, we look at the type of program that is best fitted for you. We discuss it. whether it's FHA, whether it's conventional, various programs exist. There's variable rate loans again, whether it's fixed for 5 years or 7 years. There's loans that you could do, which is non-qualified mortgage, non-QM, or we could talk about interest-only capabilities. If you're doing an investment property, not only a full documentation loan, but we can look at what is called DSCR, debt service coverage ratio loan. So we're going to look at all of that, but that's part of your pre-approval process. Now, people talk about a pre-qualification. Well, that's a conversation, but it's not verified. So when people say, oh gosh, I'm pre-approved for, well, did you look at W-2s, taxes, overtime, bonus? Have you looked at your Schedule C, your write-offs? What are you paying in taxes? What do you show? What do you don't show? Whether you're looking at bank statement qualification, that's looking at cash flow, or even asset depletion. All of these loans matter. And the way you set up your loan ultimately for your success. Now, recently we had a client who, for purposes of where they were, they have to take a higher rate today for about 12 months. Then we need to revisit it 12 months later. So we needed to pull cash out. In order to pull that cash out, we were at a higher combined loan to value. So because we were at that higher combined loan to value, the rate was a little higher. But after that time period, she's doing a large remodel and addition. The value is going higher. With the value going higher, 12 months later, better combined loan to value, lower rate. Now the market's got to cooperate with that, and we kind of see that. We're going to talk about that today. We're going to talk about the Fed's next move, their next move, and 2 more moves after that. Very important. The discount rate, the Fed move. It doesn't necessarily mean the mortgage rate's going down, but we'll talk about how that works. Go to our website at yourrealestatelife.com or go to unitedforloans.com to get started. So very important to be on top of what's going on in the market. We'll go over some examples today. We're going to go over interest rate versus interest volume. We're going to have a guest. We got Alex coming on our third segment. We're going to be having a special topic. I'm Mike Harris. We'll have more after the break.
Your equity position has started to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. Welcome our audience today, right here on Fox Sports, Ventura, 1590 AM, KBTA, 97.9 FM. You can stream us at kbta.com. You can catch us on YouTube at Your Real Estate Life. Now, our Sunday audience is also streaming us in today. We are on every other week on Cater 101. That's Sunday mornings at 7 a.m. here on the West Coast. For our audience throughout the nation who's watching on YouTube, we can help you in various markets, especially the investment market. We can help you in 46 states. United Mortgage Corporation of America, primarily though, we're approved in California, Colorado, Montana, Texas, and the state of Washington. We do refer business. Just last week, I referred a transaction out to a Florida individual who I know does good work. So we can do that. You want to make sure you get professional advice and information and make sure you are not just randomly choosing, making sure. I've been doing this for 38 years. I'd like to say I've seen everything, but that surprises me each week because I see something else. So we were talking about pre-approval and pre-qualification. And I kind of ran into this past week. We had an individual who went out looking for homes. Of course, I wasn't aware at the time, but they went out, made an offer, got it accepted. My phone rang. Hey, I'd like to get a loan. They fell in love with the property, but they didn't get pre-approved. Now we're having difficulty locating a program that's going to fit the mold to what they want to do. And it's outside the box. Their debt to income ratio is a little off. Do we pay off debt? Can we get there? Is there money? Is there gift? Is there money that allowing them to get there? Putting more down payment? All of these things matter on the type of transaction you can do. So sometimes it's buying beyond your means, but not having the blueprint. You need the blueprint. You need to understand what's going on. Don't overpay, let alone overpay and not get the ability to get approved. Now, you do have contingencies and timelines, but then you could have a disappointed spouse or party to the transaction. But getting those tax returns, those W-2s, as the end of the year is rolling around, making sure you're organized, recent pay stubs, bank statements, and also take a look at your consumer credit. Understand what's going on so we have a flavor of where we are. I don't like leading with running credit and getting that inquiry. Yeah, I could do soft pulls and some other stuff, but I want to make sure we have an idea. So help me with that. Let's find out your score. Just like I mentioned about your mortgage statement. You pull out your mortgage statement every once in a while, make sure your impounds are looking good. If you have taxes and insurance being paid monthly, make sure that those are being dispersed at the right time. Make sure everything's in order, but also take a look at your interest rate, understand how much is going towards interest versus how much is going towards principal. That's your interest volume. So a lot of you listening might say, hey, that's not me. I got 2.875, 275. I got 3.25, 4%. But take a look at the percentage of what's going towards that payment. It's actually a lot more than you think, because you're paying a lot of interest on your balance today on an amortized schedule versus simple interest or simple amortization, not amortization, but simple payoff. So you really got to watch and understand where these things are going. And we're seeing some individuals now looking at these options where they can use an equity line as an advantage. An equity line has simple interest. Yes, it's interest only. And people say, well, my balance isn't going down. But you are paying, where prime today is 7.25. If you're at prime plus a half, prime plus one, you're 7 to 8, maybe even 9%. But that is 7, 8, or 9, and it's not interest volume much, much higher. So that 3% could be 72%, 64%. So you really got to look at your angle. And that's what we'll talk about later in the program, the Money Max account. You'll have a perfect financial GPS. Very, very important. I want to make sure you understand that. I want to go over the U.S. economic calendar. It's very important every week on my side of the fence. I watch what's going on in the marketplace. It allows me to understand where the risks are to interest rates, whether they're going up or they're going down, especially when we have a timeline to a transaction, whether we have 8 days, 15 days, 21 days, 30 days, 45 days, or even more left to a transaction. And we got to understand the longer we lock a loan, the more expensive it usually is because we're buying the rate longer. So the idea is to buy it as short as possible. So in doing that, if the market doesn't have any risk of going much higher, we kind of float the loan rather than lock the loan. Many individuals, hey, you got a 30-day escrow, let's lock it 30 days, set it and forget it. Oh, we'll always go down if the rates go down. Then you're playing going here, and you're not getting all of the buy down or the float down. Yeah, so you don't. It's a game. So I kind of watch the market, and I'm a student of that. Now on Monday, we got the abbreviated trading. We have the bond market closed. It's Columbus Day. So we're going to look at a quiet start, but don't be fooled. The calm to a very busy week. You know, rates will hold steady probably on that day with trading activity, maybe a little light, maybe the positioning for the rest of the week. And, you know, there's a little bit of, positioning going on. But on Monday, I challenge you, if you're not at your job or working, let's organize. Let's organize. Let's gather some items, understand your mortgage statement, understand your payment, understand what you owe. Let's see what the value is to your property. Let's see if there's room for you to look and an equity line. A home equity line of credit can be a very good asset to have, even if you have no use, you don't have a payment, if you don't have a balance, but utilizing it as a key strategic item. I want to talk to you about that. So let's use that day as a planning day, maybe earlier in the weekend, and be ready on Monday. I'm around. Give me a call. 888-543-3980. That's 888-543-3980. Now on Tuesday, we have the Producer Price Index, PPI, and retail sales. Now, the PPI, wholesale inflation. It tracks prices in businesses and what they pay for goods. If it rises sharply, it often trickles into consumer prices, meaning potentially inflationary pressure. So those are things we watch. Now, on retail sales, it's critical read because consumer spending makes up about 70% of the U.S. economy. Now, strong retail sales suggests the consumer is still powering growth. Weak sales show a crack in demand. So we look at where we fall to these items. If the PPI is running hot, the Fed may hesitate to cut rates further. Now, I do see that quarter move. We'll talk about that. But even if growth slows, we're going to kind of watch that. Now, mortgage rates then are sticky. Now, on the flip side, if retail sales weaken, it may lead to slower growth and possibly lower rates ahead. Now, for real estate, strong retail spending usually signals job security and household confidence. Because if you're not sure about your job and the household, you're not necessarily spending because you're kind of storing the nuts. You're kind of making sure you're good. So these are key drivers to the home buying side. Now on Wednesday, my wife's birthday, by the way, but we're looking at Consumer Price Index, the FOMC minutes. Now those are the minutes from the last meeting. Now the CPI, the headline inflation number, this is the single most market-moving report of the week. We're going to look at the CPI and tell us what's going on in consumers and paying for goods and services. Now, on the FOMC minutes, we're going to see kind of the debate behind the scenes that had happened a few weeks ago. We're going to look at whether members are leaning towards more cuts or on hold, or if the hawks, what's going on as we're entering into this area. But it's a big day because we're looking at that CPI. That to me is very, very important. And the FOMC, it's kind of an after move, and we kind of understand what's happening. We're really like 100% for this move at the end of October, October 29th. We're going to be looking at that 0.25% for the discount rate. Prime will go down from 7.25 to 7.5, and then December 10th on the calendar. And we're already looking at a healthy percentage in the 80s already for that December move. And then we're looking at January, and then we're looking at March, and January is already on the table as well. So as we head towards these moves and finish October, we'll then be looking at the next set of Fed moves going into 2026. But on Thursday, we have jobless claims and housing starts and building permits. Jobless claims, the weekly report, but a good kind of warning sign for the labor market, strength and weakness. Now, we didn't get the jobs number on time, so we're looking at that and understanding where things are going. And some of the delay of information has caused a little ripple, and we're kind of watching that and making sure we don't have too many bubbles and moves, especially for our clients, and making sure they're not spending extra money. But rising claims mean layoffs. Falling claims means job security. So we're watching that carefully. So housing starts and building permits. It's a look at whether the builders are confident enough to break ground on new homes. But as you know, in some areas and most areas here in Southern California, you go under contract with a dirt lot, then the home's built for you. But something I've seen of late, I've seen homes now completed, and all of a sudden they have a sign on the exterior of the home saying it's available, which means somebody has backed out or fell out of escrow. So builders are worried about holding on with their inventory. So they're looking at that, and they're very much motivated to get sales done, whether they're doing upgrades or allowances or other items. I recently just closed a transaction on a home builder where the client was able to get approved on our end. Their end, it wasn't as easy, and we were able to get the job done. So there's a lot of solutions, and just because you talk to one doesn't mean it's that. I like to be your first choice, but I could be your second or third or your sounding board. Give us a call, 888-543-3980. That's 888-543-3980. Now on Friday, we got existing home sales. I mean, this is the bulk of the housing market, not new construction, but resale homes. It's the most relevant gauge of real estate professionals and buyers alike. So we kind of watch where we're going with that. We look at consumer confidence. The University of Michigan. Now, my wife's Ohio State fan, so University of Michigan, I know. Okay, got it. So if we're looking at consumer sentiment index, a measure of how people feel about the economy and their finances. I mean, high sentiment means confidence and they'll spend and buy homes. But lower sentiment could be a red flag of future housing demand. So we're kind of meandering at that, sometimes no change because we haven't pivoted. So as we start seeing the Fed going down and everyone goes, oh, I heard rates went down. Rates are always best right before a Fed move, right before a Fed move. So that's when you should actually hunker in and get started and let's go and be ready because we usually see rates get a little bit worse after the Fed goes down. It's like it lets the air out of, so we got to really watch that. And if you're looking at a timing item, it's important, especially on a purchase. But if it's refinancing, yeah, we can kind of wait and see. But what happens is sometimes we're low. Oh, do you think we're going to get lower? Then it goes up. Oh my God, do you think we're going to get back? Then we get back. Do you think it's going to go lower? It's an endless cycle. Now, mind you, I believe we're going to have the Fed move on the 29th. We're going to have another one on the 10th. And then we're going to have one at the end of January. Yeah, between every Fed meeting, it's 6 weeks. So that means we end up skipping February because of the 6 weeks. So it ends up being then a March meeting. So I watch these things very carefully and understand the timing of your escrow, the motivation of your refinancing for a reason. Oh, we need cash out and I have a deadline of. I just had a transaction where we had a deadline of a said day and we have met that said day. There was a lot of pressure on a short escrow. I have a transaction right now where it's a divorce situation. It's a large amount of money that needs to be available on a said date. And I'm looking at the transaction and the equity position in the home isn't as favorable to gain that amount of money. So we're trying to look at the alternatives because there's a guillotine for that day for that amount of money. And I'm going, oh gosh, what are we going to do? What are we going to do? And it was a 55 and over scenario. So we did look at the reverse mortgage opportunity, and that was leaving us shy as well. It got him to third base, but didn't get him home. So we're trying to find these alternatives because sometimes settlements and items and decisions and all these findings and court decisions, but they didn't figure out how it was getting funded. And now they're trying to figure that out. That's why sometimes it's important to pick up the phone, give us a call. Let's find out what possibilities exist so these decisions can be more clear. So bottom line, it's a big week. It's a big week. We're really looking at what's going on in the marketplace. We're going to continue to look at these daily items, the inflationary numbers, and everything in between, because it really makes a difference between that CPI, the Fed minutes, the job information, the confidence. We really want to know what it is we can do to be there for you. So very important. I mentioned the Money Max program, and we're going to go into that in the next segment. But we're also going to have a guest in our next segment, and we're going to be talking to Alex about insurance settlement, stuff. And it's a very interesting topic because when we look at the Money Max account, it can be utilized with various access, becoming the bank where you borrow from yourself. You could use it home equity line of credit, but it's able to be used only with checking and savings. Checking and savings accounts only can actually work best for you. So when you look at your loan and you close, we'll go into it a little here. You had an interest rate, let's say today it's about 6%. You're going, okay, I'm at 6%. But when you looked at your closing statement and your closing disclosure, on the very bottom it said total interest percentage tip. That's the amount that you're paying over the life of the loan. Now at 6%, you might be at 118%, 120%. And you're going, well, what's that? It's like Wizard of Oz. Don't pay attention to the man behind the curtain. Okay, that is the amount of interest you're paying over the life of the loan. The break even at 100% is 5.2%. So if you're anything below that, you're less than 100, but you're still 52, 64. You're still paying an excessive tip. That's more than I would pay if I was going out. I'm sorry, I'm not that great of a tipper. I don't pay 52, 64%, 84% tip. Sorry, let alone over 100. So when you're at 3%, you might be still at 58, 62, 64%. So what I want to do is try to help drive that down further by moving you further down the amortization schedule, which means more money is going towards principal. Now, when you look at that math and you look at your statement or you look at your amortization, which you have as part of your closing documents, you don't break even at 50-50 until 18 to 21, 22 years in. I don't know, if you took 30 and folded it in half, it's 15. It's not 15, it's 18 to 22. And that's even with a low interest rate. So the goal is to move further down using discretionary timing and using math algorithms that are more difficult for everyone to follow. But personally, really quick, I'll tell you my story. I was 26.4 years to be debt free. I bought my home and did my stuff. And yeah, I got a low 2.75. I'm doing great. But I was personally taking it down to 12.3 years. Through this program, it took me down to 7.9 years. I want to show you how you can do that as well. 888-543-3980. We'll have more after the break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888-5433-980.
Yes, it's a little scary right now, but every crisis presents an
I keep saying I'm
opportunity.
putting
How many
outlets.
times have you looked back and said, why
We're
didn't I
fine.
act?
Sorry.
Do not try
I'm
to
sorry.
navigate lending without a map. Tune in Sunday at 7 a.m. on KRZ 101 with host and CEO Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is open for business and ready to lend. Visit UnitedForLoans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers can be tossed from one direction to another. How can you make it all stop? United Mortgage Corporation of America, UnitedForLoans.com can be your guide. Call directly at 888-5433-980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-5433-980 or visit at UnitedForLoans.com. That's 888-5433-980.
I've been laid up from work, my rent is due. Kids on me, pregnant shoes.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I've been making reference to life settlement on our last program. We talked about that. Check that out in our third segment of the program, because integrating that into the Money Max program was a kind of unique direction, because many seniors have life insurance that perhaps their kids are in great shape and they have that for the protection of their family. Whole different topic. Now, I'm licensed for life, health, and disability, but I don't write, I refer. So in doing that, it's understanding what you have in your capabilities, items and assets that you have that are of use and maybe not of use because they're dormant. They're really not doing anything for you today. So it's evaluating those items. So it's really important you do so. But, we're talking about the Money Max program. And I'd like to also mention, you can be seeing this program. You can go on our YouTube channel, Your Real Estate Life, and catch more of that. But you can call us and have your own program, 888-543-3980. Something I want to also mention is on Tuesday evening at 6 p.m., we're going to be doing a webinar. And it's a 1-hour webinar. And you don't have to speak. You don't have to be on camera, but it's great information. And I could promise you, it's going to be a life changer. It's going to tell you things that you're not quite aware of. And you're going to go, oh my gosh, oh my gosh. Yeah, you're going to have that moment. If you saw or got an idea of an opportunity that's going to shave at least a third or a half the time when you're debt free, Eliminate all your monthly expenses that are voluntary because you can't get rid of groceries and some of those items, sure. But when you got the car, the student loan, the personal loans, the mortgages, all those items, eliminating that debt in as little as a third or half the time, some cases 5 to 7 years. That's what I want to share with you. It's a life changer. We've had individuals break down and cry. We've had individuals who have been with us for many years who are now debt free. The company has managed over $10 billion of assets and debt, or debt. And we've seen about 2.8 billion of obligations extinguished. It's amazing. Take a look, no obligation. Generally speaking, you can have a direct meeting with me or go Tuesday evening. Send an email to interest, 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 at aheadformoney.com, aheadformoney.com. When you send that, it goes to me. It's not going to AI, it's going to me. I'm going to take a look. Hopefully, I have your name, phone number, and of course, I'll have your email. What I like to do is get you access to the Tuesday night webinar. I want to give you a few links to watch short, give you some background. May even also give you a budget worksheet just so you have that. Because what's integral to any solution is understanding what your ins and outs are. What's coming in as way of income and what's going out as far as expenses. Sounds straightforward. But a lot of people, well, okay, let's get an idea. Everything from your monthly to your quarterly to your semi-annual to your annual items. We want to have a handle on these to understand that. And we're going to look at your gross income because that is, or your net income, sorry, because that's the money you're taking home. The gross is not what you're taking home. You might count on sometimes tax refunds, and we can budget that in or have that be a benefit at one point during the year. But we look at this together. We have a meeting. I need to understand your why. What's going on? What's your goals? Where are you in life? Are you saving for college, for kids, family? What's going on? What's your motivation? Pay off debt, accumulate assets, buy additional doors for rent, investment? Are you converting your debt to wealth? Or are you just wanting to eliminate debt? So we understand this. And then we're designing that to be appropriate to where you are in your real estate life. Now, I'm a mortgage guy. What's he talking about? Well, sometimes a refinance makes sense. Sometimes it does not. It's not necessary because of the interest and the time period in which we're discussing. Maybe an equity line does make sense. Maybe it doesn't. But maybe it's just utilizing the Money Max account and being debt free in 5 years, 6 years, 7 years, 9 years, 12 years, whatever the case may be. But it's getting you on the right path. And in doing so, it's freeing up money that you were going towards debt. And maybe you are looking to do other things that creates additional buying a home, another transaction, ways that I can help. Or maybe it's you passing it along and helping other families do the same. Because right now I'm reaching one party and one home at a time, maybe some more through this program. But it's helping people manage their own affairs and become debt free or be in a better position than they were when they got started. That's what this is all about. Now, interest volume, again, is the amount of interest that you're paying, not the rate or the number. The biggest example of that, again, is amortized versus simple interest. When you have an equity line at 9%, that 9% might be better than the 4% amortized. Sounds odd, doesn't it? But look at the math. If you take the same exact loan and look at the difference, it makes a big difference because it's simple interest. You're paying interest steady versus interest tilted. Now, rate does matter to some extent because if you're at 6.5 versus 6%, that difference is a decent amount of money on that volume. So you do want the best rate, but you also need to know the timing of what you're doing it for. Because a lot of times people want to buy a rate down. So, oh gosh, I'll buy the rate down. We'll pay one, two, three, whatever. It's not more than three usually, but they'll pay, let's say, a couple points to buy a rate down. But if you're doing a loan for 500,000 and you take 2%, 2 points on that, holy cow. I mean, you're spending 10 grand. So how long is it going to take to get that 10 grand back with monthly payment savings? You also look at the tax advantages of the write-off in the year that you're purchasing and all that stuff too. And I got it. But then you got to go into that your rate's lower and your write-offs could be lower. And there's so many other variables, and talk to your tax professional. But if you're buying that rate down, if it's your money, how many months is it before you like me? 6 months? That's not bad. 24 months? Still not bad. But I've seen ones go up to 50, 60, 70 months. And mind you, you don't have the money because you're sending it out monthly, whether you have that bulk and you had it, and you could be earning, let's say, money on that money, perhaps, if you're disciplined, and even extend that even further. So it's knowing your math and knowing what's going on. And that's what we look to do. Now, the Money Max, it's a cash flow analysis that requires only that checking and savings account. You don't need to be that sophisticated to use this to your benefit. I mean, it looks at allocations, and it looks at your discretionary, whether it's $1, $100 or more. We want to see that you have a positive end of the month. We don't want you losing money every month because then we have nothing to do. But we also are very conscious of your savings, the amount of money that you're going to have to allow you to sleep better at night. That's very important. Now, it prioritizes principal reduction across your mortgages, your auto loans, your student loans, your credit cards, all of these obligations. And doesn't necessarily go, let's go with the highest rate. Let's go with it's doing it in the best math way possible. Now, if you had 6 different decisions every month, it's 720 factorial math combinations. Holy cow, you get it right one month. Good luck next month. That's crazy. Now, this program offers a lot of privacy and security. It doesn't touch your money. It doesn't transfer your money. You still do that. It's not a self-driving car. You still have to go do those items. It's a GPS. You're still the driver, but you're going to be able to eliminate this debt in a much more efficient manner. We'll continue on this. We'll wrap it up as we go into our last segment. I'm Mike Harris, CEO of United Mortgage Corporation of America. More after the break.
Get pre-approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. Locally here, it's our Ventura County edition here on Fox Sports 1590 KBTA out here on the West Coast. But we're here on YouTube. We're on Your Real Estate Life, and you can catch our past audio programs at yourrealestatelife.com on the web, or go to unitedforloans.com. That's unitedforloans.com. I've been inviting people to our webinar on Tuesday nights at 6 p.m. here on the West Coast. Change that to your local time based upon where you're watching. But you're going to be able to join us there, and you're going to see a presentation about the Money Max program. It's going to give you a lot of background, a lot of great information, not pertaining directly to you. And that's where I'd like to have a meeting with you and understand where you are and what your priorities are. But gaining that background is going to be very, very important. So in order to get access to that, I'm asking you to send me an email, interest@aheadformoney.com, AHEADFORMONEY.com. What I hope to do eventually is allow and understand your ins and your outs and get you your debt-free date projection. Understand where you are. Now, your results can depend upon your discipline and your income stability and following the guidance. If you follow the guidance, you will be debt-free in as little as 1/3 or 1/2 the time, or as little as 5 to 7 years. It does work. Okay. But this is someone smarter in the room than both you and me and many others combined that doesn't talk back to you, but gives you perfect information. Sounds great. Saves you a lot of time, doesn't create and cause you to use more time, but it saves you time. It's not the envelope method. It's not your spreadsheet. It's not this. It's not a non-perfect science. It's not only getting you on the green, but it's getting you in the hole. You're not hitting that windmill on the miniature golf course. You're getting in the hole. You're not getting diverted somewhere else. You're not having a distraction. It's keeping you on task. It's allowing you to look and have everything at your access. Securities there. Your bank account numbers aren't there. Your account numbers aren't there. Your name isn't there. It's a sophisticated accounting tool that's giving you perfect information that you have access 24/7. Works really, really well. Like to see you there. 6 p.m. Tuesday night. Send me the email. interest@aheadformoney.com. If you don't want to send the email, pick up the phone, give us a call. 888-543-3980. That's 888-543-3980. During the break, I was watching some of the questions that are coming in. Earlier in the show, I talked about locking a loan and floating a loan. And for those of you who haven't bought a home, when you have a loan, you, of course, have an interest rate that goes with your borrowing. You're paying for the money. Depending upon your equity position, your credit score, your rate can vary. Now, once you determine where you are on that level, you then can pay points to buy your rate down, or you can pay lesser points and have a slightly higher rate. So you can go one way or the other. But when you pay points, you're paying prepaid interest. You're paying it ahead of time because you got a little bit of extra money in your pocket and you decide to spend it now rather than the monthly. It happens. You sometimes have seller contributions, lender contributions, or gift money. And maybe you buy that security long term with money today. But when you lock a loan, it also then varies about what's going on in the marketplace, the economy. I talked about the calendar this week. That's a little quiet on Monday. But later in the week, we have inflationary CPI. We've got numbers coming out, and these things are market movers. The Fed move at the end of the month. All these things matter. And as we move up an eighth in fee or down an eighth in fee, quarter better, midday price changes, we start moving around a bit, and the loan size, it could be $500, $600, $1,000 just on a blip, up, down, around. And what I try to do is try to save every penny, nickel, dime, quarter, whatever it is. I spend your money the way I spend mine, sparingly. I want value for my money, and so should you. So I look to save that money. So whether it's today, tomorrow, I try to get the least amount of days locked to close your loan. So love to get that clear to close, to allow the loan to be ready to just close rather than, oh, we need conditions. Oh, we're waiting on this. Oh, we don't have the appraisal in yet. Oh my gosh, whatever it is. We can handle those issues, but we want to tackle them sooner versus later. If we know we have a certain timeline, maybe we do because we're looking at market items and we're worried about things in different parts of the market, of the economy at certain dates and times and years. Sure. Otherwise, we're chasing and we're in trouble. So that's when you use the lock more effectively. But when I'm looking at locking in a loan, it's strategic. And it's not my decision, it's yours. But I lay down what's going on and what I see, and then we make that decision together. If you're comfortable, we lock the loan. But then when rates go down, you're saying, but rates just went down. So we want to really strategically look at this in the right way. So that's kind of what I see there. It depends upon if you're doing debt consolidation or rate reduction. All these things matter, and the motivation in your why. And that tells us the risk level that we should or should not be doing. Now, we talked about the year-end housing market. We've had some questions about that. I would like to leave that to your local expert Your local expert, your local realtor. If you have someone, great. If you don't, I'd love to refer. But each market is a slightly different than the next. If you have a listing and the price went down or it went off the market, different markets are different for different reasons. And it's not universal. People want to put it into this one tidy little box, and it's very difficult to do. But we're seeing roughly that 1, 2, 3% meander of home prices. We're back to a more realistic level rather than, oh my gosh, it went up 20, 30%. Oh my gosh. But we're not seeing it going down by that level. We're just seeing it realistically going sideways. And people are still trying to stretch it back up. And that's what's going on. It's the rubber band effect where you stretch and then it bites back, but you just don't want it to bite back that hard. That's what we're looking at right now. So it's pricing it correctly in this time of year. You have serious sellers, serious buyers, and we're looking to get business done. Call right now, 888-543-3980. I want you to go to our website at yourrealestatelife.com or unitedforloans.com. unitedforloans.com. When you go to the website, you're going to see a lot of fun little toys. You got the mortgage calculator, you got information, you got the economy, you got all this fun stuff going on. Bottom line is, you need to know what's going on with your real estate life. Pick up the phone. Call us today. 888-543-3980. Send an email, interest@aheadformoney.com. aheadformoney.com. Been a mortgage loan originator. Been doing that now 38 years. My MLO license 233410. Company United Mortgage Corporation of America. 3189 is our NMLS. If you would like, I would love to get your feedback. You can go to our, go on Google, leave us a review. If you find this program helpful, that would be great to hear from you. What I really try to do is give you guidance for your next transaction. I'd love to earn your business. I'm never too busy to work or speak with you. We do close loans. Yes, we do. That's our focus. But we want to make sure your guidance to get there is the best. Our goal is not to have you close a loan, the door shuts, and now you're trapped. We want to make sure you have an affordable solution and outcome and a way to transact once you're in your home. Just recently, I ran into an individual who had bought a home about 3 years ago. Everything was great. She was even looking that maybe she'd buy investment property and she was going on her merry way. And then all of a sudden, something then happened in the family and she was looking to sell the home. All of a sudden, a sale sign goes up on the property. So all of a sudden, 2 days later, the house is moving truck and she's out. 30 days, the home's on the market. 37 days, I think for sure, or 8 days, 38 days. And all of a sudden, the for sale sign's down. Okay, what happened? Turns out she was thinking about moving out of state, decided not to, and now she's moving back into her same home. So round two. So, of course, feeling very foolish about everything and all that. Now she's making her new start again. So I guess it's a second move-in day. Understanding what your decisions are, the numbers and the realistic pricing of your property, consulting experts and talking and listening to those experts is very important. Listening to this program and gaining information as you are, and I've given a lot today. Sorry, it's a fire hydrant of information. It's not about, gosh, I have enough now. Let's do it myself. Working with experts you may think is expensive, but working with amateurs is even worse, and doing your own surgery can actually be catastrophic. I want to make sure you have the right ideas and understanding, so this way you can actually follow. Of lately, I've seen this with myself and technology. I don't want to necessarily only be the passenger. I want to understand how to drive the bus, but it doesn't mean I should be driving the bus. But in case something happened, I can actually drive. I want to understand it well enough that I'm not blindly sitting in the passenger seat. And that's what I want to give you today. I want to give you the ability to see. I want to give you the ability to see the transaction ahead, understand the choices that are ahead, the preparation that you do prior, the work prior to the transaction to be the best you can be. Getting the right credit score, the right evaluation, understanding the assets, your cash flow, understanding your income, documenting it properly, finding out what it is you can do and what those options are. And it allows you to make clear decisions, not ones that you, oh, I think so, oh, I don't know, well, and then regretting those later on. This information is vital to any real estate transaction, and that's why we talk about them. My end, I go over my calendar, I go over the clients, then there are different stages. I talk to realtors about pre-approvals. We talk about the open houses and activity. I understand general trends in different markets, but I stay out of the way. That realtor has 160, 72 things that they're doing. They are doing the job that they need to do with contracts, disclosures, everything else they do. Yes, I receive those. Yes, I look at those. Yes, I sometimes have to get addendums or corrections based upon the lending criteria that's there. We all then get those jobs done. The transaction sometimes has changes. There's credits from the seller. There's credits from the realtor. I recently had a transaction where it was going to be credit from the realtor and the seller combined. I also had an ability, as I have right now, not on the purchase, but on a rate and term refinance. So if you're doing a VA, an FHA streamline, where you're looking to do a rate and term refinance, lowering based off your balance or maybe interest rate or perhaps freeing up discretionary, I'm tossing in 90 basis points towards that deal. Almost 1%. Depending on your loan size, it's a great credit. I could either buy your rate down, we talked about that, or credit towards any of your closing. So we can talk more about that on purchases. Looking at 40 basis points on my purchases right now. I'm tossing in from my side, let alone anything you're getting from a seller or realtor or gifts or anything else. So I'm looking to discount that. That's what we're doing here in the fourth quarter. 888-543-3980. That's 888-543-3980. This is not a trick. It's an early treat as we head into Halloween. Now, all of these things, again, matter. And it's what I can do from my end. And I'm very transparent about the transaction. And that's what I'm hoping to get from you. Because together, we're going to succeed. Together, we're going to get the best of what we can do based on market, timing, and your transaction. I'm hoping these things make good sense to you as you go ahead and do one of the most expensive decisions you're making, financing and buying a home, or refinancing and repositioning to be the best you can be. Other professionals that are listening, whether you're in insurance, CPAs, bookkeeping, other mortgage loan professionals, the Money Max account could do very, very well for you. Realtors, very well for you and your past clients. It can help activate your past clients, the database, keep it active, but also help improve their debt structure. If you went back and spoke or talked to or mentioned that you can pay off all of their debt in as little as 1/3 or 1/2 the time without changing their lifestyle, might get you far. If you free up their abilities or debts to allow them to buy additional items, whether it's insurance items for retirement, college planning, whether they're buying more doors in real estate, do you think that would be of assistance? Divorce professionals, how about valuing debt a little bit differently than just a number? Actually looking at it from the full picture of when that debt can actually be paid off based upon the discretionary that's available and what that debt actually is versus the rate that you may feel it is. It's actually being able to work in that spectrum. I'd like to talk to all of you professionals about the ability to help your clients and do that nationwide. I've been doing that now for a few years, helping individuals through their professionals and their team. We talk about team on this program. Your offensive line protecting you against the defense. I just asked the offensive line to help you, the quarterback, gaining more information to be more cohesive as we move down the field together. If you have one person on your offensive line that is a weakness, the defense comes in and you're a scrambling quarterback. I don't want that happening to you. We've already had a few quarterback injuries this year, and whether that was the offensive line or their own fault or whatever the case may be, we're in the backups. I don't want you getting a backup plan. I want to see the first string, and we want to go down the field together. 888-543-3980. Send me the email interest@aheadformoney.com, AHEADFORMONEY.com. When you send that email, I want to send you an invite to Tuesday night webinar, 6 p.m. Pacific time, Pacific Daylight Time. Still haven't had that time change out here yet, coming after Halloween. But change that time to your local market, but 6 p.m. Pacific Daylight Time. I want to make sure you are able to attend, get great information in a 1-hour timeline. Interest@aheadformoney.com, AHEADFORMONEY.com. I will gain that directly myself. I'm going to send you back an email with the invite. I'm going to send you a few links to watch, and we're going to get the job done together. But we're going to take as much time as needed. Hopefully we save you money faster, not longer, because every month that goes by, you're spending more money. More money that needs to be on your side of the ledger. 888-543-3980. Now, you've been listening to Your Real Estate Live, Your Day in Real Estate Radio. I'm Michael Harris. MLO 233410, NMLS 3189. Reach out to us, 888-543-3980. Until next week, what kind of loan do you have?
United Mortgage Corporation of America, UnitedForLoans.com will continue to take your calls after the program. Call now to start your home loan process at 888-5433-980.
I was running across a statistic. October 12th to 18th is actually the most favorable time to buy a home. Statistics show that. Crazy, huh? Are you buying a home? Let's get you pre-approved. 888-543-3980. That's 888-543-3980. Let's get you to that webinar on Tuesday night, 6 p.m. Interest@aheadformoney.com. We'll talk to you next week. Is next week's